What's up, Mavericks? Is your business facing cash flow problems, or have unexpected expenses knocked you off track? Or maybe you're ready to expand but just don't have the capital. If you're running a business, money can make or break your next move. When it comes to funding, you've got two major options: a business loan or a business line of credit. But here's the catch: the wrong choice could leave you trapped in debt, overpaying in interest, or scrambling when you need funds the most. So, which one is the smarter move? Keep watching to find out more about business loans versus business lines of credit, and by the end of this video, you'll have a better idea of which option is better for you. A business loan, also known as a term loan or installment loan, is what most people think of when they hear business financing. It's pretty simple. You borrow a fixed amount of money, get it all at once, and pay it back over time with interest. These loans are great for big one-time expenses like buying equipment, renovating your space, or launching a major expansion. But business loans come with structured repayment schedules, meaning you have to make regular payments whether you're using the funds or not. You can further break business loans down into three categories: short-term, intermediate term, and long-term. Short-term loans typically have lower borrowing limits, higher interest rates, and repayment terms up to 2 years. These loans are best for newer businesses or borrowers with lower credit scores. Intermediate term loans have higher borrowing limits, have typical repayment terms up to 5 years, and may have fixed or variable interest rates. Long-term loans have high borrowing limits, repayment terms up to 20 years or longer, and more competitive interest rates. These loans are best for established businesses with strong credit profiles and revenue. On the other hand, a business line of credit works differently. Instead of getting one lump sum, a line of credit gives you access to a pool of funds that you can draw from when you need it, kind of like a credit card. The credit limit is set by the lender, and interest rates vary on factors like credit score, time in business, and annual review. You only pay interest on what you borrow, and once you repay, the money could become available to borrow again, depending on how your line of credit is structured. This makes a line of credit perfect for managing cash flow gaps, covering seasonal expenses, or dealing with unexpected costs. It's flexible, but if you're not careful, it can be tempting to overspend, and some lenders charge maintenance fees even if you don't use your line of credit. There are several lines of credit to choose from though. A revolving line replenishes funds as they're repaid, giving you consistent access to capital when you need it, while a non-revolving line of credit is closed once all funds have been used. A secured line of credit requires collateral, but results in lower rates and higher credit lines in most cases, while an unsecured line doesn't require specific collateral, but may come with higher rates and lower credit limits. Before we continue, Mavericks, this video is sponsored by Lendefied. Many business owners secure funding but struggle with how to best put their capital to use. That's where Lendefied makes a difference. They don't just provide the financing you need to grow, they also offer fractional executive services, connecting you with experienced CFOs and CMOs who are committed to your success. Whether it's strategic planning or financial management, Lendefied helps you stay focused on what matters most: running your business. So if you're ready to level up with a true financial partner by your side, visit merchantmaverick.com/Lendefied to see how Lendefied can support your business. All right, back to our video. With a basic understanding of each type of funding, you should be able to start narrowing down which option is best for your business. To help you make that final decision, we'll break it down even further. A business loan may be the best option if you have a specific expense in mind and know exactly how much you need. You want a lump sum for a large purchase, such as equipment or renovations. You want more time to repay borrowed funds. In this case, look for an intermediate or long-term loan. You want potentially lower interest rates than what you'd find with lines of credit, or you have an established business and a strong credit score. While it's possible to receive a business loan as a newer business, or if you face credit challenges, you'll usually have higher rates and shorter repayment terms. Now, if a business loan doesn't quite fit your needs, here's when a line of credit may be the better solution. You have smaller expenses to pay over an extended period of time. You want access to cash when you need it. You need a financial cushion for unexpected expenses and emergencies. You want a source of funding that's reusable without requiring you to submit multiple applications, or you're a newer business, have lower revenues, or don't have the credit score needed to get a long-term loan or low-interest business loan. Similar to business loans, newer businesses or borrowers with less than perfect credit may qualify. However, these businesses can generally expect lower credit limits and higher interest rates. Once you've decided which funding solution is right for your business, the next step is to find a lender. lender. You can start your search with our list of the best small business loans and the best lines of credit, both of which are linked in our description below. But the bottom line is that both a business loan and a business line of credit can be great tools when used correctly. The key is choosing the one that fits your needs the best. And when used wisely, both options can be a lifeline for your business, whether you're scaling up, covering expenses, or just staying afloat during slow months. Just remember, no matter which option you choose, weigh out the pros and cons, determine if your business is in good financial position to take on debt, and make sure to communicate with your lender and make your repayments as scheduled to qualify for better funding options in the future. If you want to learn more about business loans versus lines of credit, make sure to check out our full comparison link down below. And I want to hear from you. What would you use funding for in your business? An expansion or an emergency backup? Drop a comment below, and if you found this video helpful, hit that like button, subscribe for more business tips, and I'll see you in the next video.